Today we're going to talk about Andrews Pitchfork, one of my favorite drawing tools in all of technical analysis. So let's jump right into it. It's one, for some reason I don't see a lot of people talking about this anymore. Rarely do I ever hear anyone talking about it. So there are tools out there that will automatically draw this for you. There are some out there you can probably get. I'm going to do it manually. This is what I do anyway. I don't have an automated one. So we just go to your drawing tools, whatever charting platform you're using. I'm using NinjaTrader 8 here, but Andrews Pitchfork is available on most charting platforms. So you go to your drawing tools section, go down to Andrews Pitchfork, click, and this is a 3-point drawing tool. So what I'm doing is I am clicking at a low, and then I'm holding down my left button, and then I release. Whoops, I got to actually click it again. And then I move over here, and then I click it again. All right, so as you see, it draws these trend lines forward into the future. So we have our midline here, and that is called the median line. That's this one here. Sometimes it'll be more highlighted or bold. And then we've got these two on either side, and then those two on other side. And sometimes it'll just have, depending on your charting platform, you may be able to draw more lines. It might just have these two, in other words, single parallel lines on either side of the median line or more. What you could do, at least here in NinjaTrader, is you can actually go in and customize this, and a lot of platforms you can. So I'll just kind of give you an idea here. So here I can go in and edit the number of levels I want, add more, add more, add more. I think it defaults with just 3, the median line and the 2 parallel lines. Okay. So anyway, change colors, blah, blah, blah. All right. So let's talk about what it means and how to use it. So essentially, let's see. Let me bring up my drawing tool here. Essentially, again, the primary line you're looking at is the median. And then you've got these 2 lines here. These are like trend lines. So a lot of people look to buy off of these. And of course, the trend is your friend until the end. So as you get an extended trend, it's less likely to continue. So the ideal situation really would be to buy early as it comes in and bounces off of the first trend line here. The longer it continues, the less probable it is to continue. So that's one way of using it for entries like that. Now, you would not want to use this in isolation and not use anything else. You want to use it in conjunction with other tools to make sure that there's really demand coming into the market there. All right, and likewise, this could be provided as support over here and even over here. So that's your general use of it. Now, a second approach is that when the market breaks through this trend line here, again, remember, we've got our median line, and then we've got these 2 here, and then these are really out at extremes. So when you break this line here, some people even do it when you break this line here, but that is pretty reliable to say, okay, this trend has ended. And once you break below that line and it kind of goes out here, now this is very important. Just because that trend ends doesn't mean you're going to get a trend reversal. I hear a lot of people assuming that when that trend ends, then the market's going to go down. Hey, not necessarily. There's no such claim that once a trend ends, then a counter trend begins. The markets aren't trending all the time. A lot of times they're just moving sideways. So don't take it as a counter trend trade automatically. If there's other confirming factors, then maybe. But don't assume that for sure. That's a big, big, big point. Another point is, how do you draw these? Well, what you want to do, and it can be a bit subjective, I will grant you that for sure. But the general rule is you take a low and then a high and then a low. And again, you want to get in as early as possible. So before this, the market had been kind of going sideways, going down a little bit. This is the lowest low here. And that's what you want to do. You want to find a very low. So the market's been coming down. We're looking for a reversal in the trend. Nail that little puppy right there. And then when you put in a higher high and a higher low, In other words, the first higher high, the first higher low, those are the best ones to use for drawing your Andrews Pitchfork. Again, you want to get in so that the signals come in early, and therefore you want to draw the tool early as possible. I'm going to finish up and show you another technique here that is very helpful. So when we have, first of all, one of the questions that comes up with, well, when we have double top here equal highs, the trend turns around, but it's not really so much of a lower high. Which one do we draw it off of, that one or that one? Well, they're so close. Don't nitpick whether that's a few pixels higher than that one. They're close enough. There's a bit of noise in the markets. And so I always choose the second one. That's my rule. All right, and then now if we take it from that high to that low to that high, look what we got here. And this is another technique that we can use. When it breaks to the downside, now we're in a downtrend, right? And instead of shorting highs, we never get to the high of the trend line, to that one or to this one. This would be the main one to be looking to take shorts off of. So if this gets very extreme in its down move, so when in the direction of the trend, you go outside of the extreme trend line, that is an exhaustion pattern. Now, again, that does not mean you're going to get an immediate trend reversal. Don't think of that. That just means it's a very, very, very dramatic move, an unsustainable move for the moment. And you could look for if you want to be very, you want to be played very aggressively, trade this, but it's better just to trade on the direction of the trend. Wait for it to come back in here. I'd actually take some profits in here. Wait for it to come back in. Now you got to watch all the dynamic of the market, the money flow, the cycles of the market, the momentum of the market. Again, this is not a one-trick pony here to be trading. Happens again. Now, again, remember, the more something happens, the less likely it is to happen, whether it's the trend, momentum, cycles, or these extreme moves. So the second time, now, again, it's kind of the rule of threes. So when we get one, two, third one's less likely. What happens? We put in a double bottom, stays inside of the range of the Andrews Pitchfork. And now we turn around and, again, look though how we hit these lines so beautifully. So these are two dynamics of drawing it. Basically, you'll get more of these kind of patterns when you have less swing, a smaller swing here, than when you have a bigger swing. So as I mentioned earlier, it's a bit subjective, but it's all relative. So what you're really doing is you're using the market's own swings at any given time to project out into the future if this energy of these three swings, how does the market react to that in a relative manner in the future? So whatever the first three swings you're using, the high, the low, the high, or the low, the high, and the low, there's a relative movement within those three swings that you're projecting out into the future to see how it performs, how the price action performs relative to those initial three swings. Sometimes they'll be wide, sometimes they'll be narrow. Anyway, play around with it a little bit. It may be for you, it may not be, but it's another tool that you can use in your arsenal, potentially. See if you like it. Again, use it with other things. If you want to get my timing indicator, you can get that. If you want to get my rubber band trade, love to share it with you. I give the rubber band trade out, one of my favorite trade strategies to the trading community because, well, I give it to you for free so you can start making some money before you spend any money. And that's the whole idea. That's the whole concept. It's a trade that works great for me. Super high win-loss ratio. And I just want to give it to you for free to demonstrate to you that I know what I'm talking about because, hey, I can sit here and talk all day, but until you start making money, nothing else matters. So let's get you making some money for free.